Well, good evening, or good morning, depending on when you are watching the video. I want to celebrate every one of us on this call. I'm so happy and excited to have you on this call tonight. Tonight marks the final class for the beginners training that we've had for the past 1 week. And I want to say a big thank you. Those of you that have not considered it as difficult to always be on this call. You know, quite a number of people want to be successful, but only very few persons are ready to pay the price for success. You could imagine when we started close to 300 persons, and then gradually along the line, well, it's not because those people want to drop. There are some of them, it may be because they don't have enough data. Some may be because, oh, I thought it's going to be something that will make me money fast. Some say, oh, no, it's just difficult. I can't comprehend this. If you want to live the average life, then difficult becomes the thing for you. But I want to celebrate every one of us who has been on this call since Monday up to this very present hour. It's not always easy, even for us. We just got to be there every time. Every time we finish one, we get into another class. And the good thing that I'm celebrating you for is you being able to see it through. For many of us, you might take it to the next level. For many of us, oh, it's just okay where I am. Let me just build on this. So whatsoever situation or the divide in which you are, we want to say thank you for making us part of your success story. Because I know that even from this platform, quite a number of us will become very, very, very successful. I was just reading through the professional class 4, and I was going through their comments. Maybe I will share it with us before the end of the class. But then, it gives one's joy. It's not just about the money. The money is important. Do you understand? The money. I don't ever join anywhere. The money is not. The money is the cocoa. But in this aspect, what we're even using the money for is a different ball game. But then when you see people that are appreciating glory to God, and we believe that amongst you here, there are going to be traders, people that will turn the tides around, people that will affect their generations with the skill that has been acquired. If you are that person, can you just type a capital letter Amen in the chat box? Type capital letter Amen. Okay, all right. Somebody will say, I don't know whether the voice is clear enough, but let me try to put on this piece, maybe to make the voice. All right. Okay. Mr. Kule, is it clear at your end, sir? Is the voice clear? Okay. Awesome. If you can hear me clearly and it's clear, just a sound check now. If you can hear me clearly, can you just put 555? If you can hear me clearly, the audio is clear. Awesome. Okay, great. Okay, all right. I just wanted to be sure. Don't worry, if you don't get it, we are going to be dropping the recordings, and I believe many of us are watching the records and the recorded versions and things like that, so that you can be the best. I just want to go as fast as possible because we've got a lot of grounds to cover tonight. Let me quickly share my screen. Tonight, we'll be going through one of the most important trading strategy that you will ever learn. I want you to please pay attention. Please pay attention. What you're going to learn tonight, you might never get to learn it like this again in your trading career. Most people don't understand the concept, but we try as much as possible to bring it to
that you have a clear understanding. If you understand this concept, it will be difficult for you to blow people's account. It will be difficult for you to blow your own account. You know, we run an investment platform on Rich Vision Academy, and over the period of time, you know, some trades, you know, there are some times that the traders will have a down period and an up period. But one thing that we've been able to ensure that even there's no money that is blown, account balances reduced. Of course, when you see trade is like up, down, up, down. Even when it's going down, we don't get to blow accounts. That is this, and that is the strategy I'm going to be teaching you tonight. So what is it? We call it the money management and psychology of trading. Once again, my name is Olushola Popola, a chartered accountant, investment advisor, and also a life coach. So here, what I want you to look at, money management is essentially determining your risk and profit. Determining your risk and profit before placing a trade. It's not after you have placed a trade. Before you place a trade, you should be able to look and say, what money management rules do I want to apply? Ladies and gentlemen, I know many of us have heard that Forex is risky, but I'm here to tell you that if you follow the instruction, Forex trading, online trading, commodity trading could be the safest kind of business that you can do in this world. It is true, they write it, but I always say it and I try to challenge people that if you know if you don't know something, you will surely not. If you don't know how to drive, you start to drive, you will have accidents now. But you know, somebody who knows how to drive and is careful following the rules, it's not that he may not have accident, but the chances are slim. Unlike somebody who learns a 1 week training and then he carries a car, is going to Ilorin or is going to Kano. That person has 95% chance of, you know, having an accident, and they will say, oh, the road is risky. No, it's not the road that is risky, it's that fellow that did not determine this level of risk. So without a sense of money management, many traders hold on to losing trade for so long. They hold on to losing trade for so long, but take profit on winning positions prematurely. You know, I don't know how many of you, if those of you that are traders, if you've been trading, you will notice something. There are times that a trade is going against you. And as the trade is going against you, you will be saying, oh, you are praying that it will come up, it will come up, it will come up, it will come up. Just a minute, please. Let me just fix something on my phone. Okay. So here you are saying it's going to go up, it's going to go up, and it's going to walk in your direction. But most of the time, you find that it does not. So when you are taking trades, you easily close a losing position very, very, very late. But a profitable position, you will leave it, you will jump out of it too early. Just a minute, I'm trying to set something here. Okay, sorry, please. Sorry, please. Just, I need to set this. Okay. Okay. All right. Sorry for that little bit distraction. Okay. So when we talk about money management, you now look at it that how do I manage my money in this thing? See, there are 7 different essential money skills that you must know. If you don't understand these essential money skills, you will not be a successful trader. And the first money skill is this: you must value money. You must value money. Because a lot of people don't value their money. You see, I see no reason somebody joined this training, and after 1 week of training, the guy is saying, Mr. Shola, I want to fund my account. I said, when did you do the training? He said, last week. I said, what? He said, I can now trade. I'm making some profit with my demo account. I said, you are making profit with demo account, and now you want to go fund your live account? I said, are you working? He said, yes. Where you see, if you don't value money, the people that set up this thing, they've put up things for you to practice. Ladies and gentlemen, I tell you, any one of you who goes to fund a life account after this training without first practicing for at least 2-3 months, I tell you, you don't value money. You don't value money. For you to be good on this and skilled on it, you must have traded the demo account for minimum, that's when we say minimum, 2 to 3 months. That 2 to 3 months is even just, I understand you need money and all this stuff. But you must value the money. How can you take $200? $200, is it cheap? And you go and put it in the market and then you say, the market took it, I blew the account. Just like that. When you value it, you can control it. When you value money, everything that you need to control this money is already on the system. You heard of the stop loss. We teach you stop loss. We teach you position sizing. I'm going to be taking part of those things tonight. These are the things you use to control the money that you value. If you don't use those things, then you don't value your money. It's what you control that you save. You'll be able to save so that your loss does not exceed the recommendation. Your loss does not, you don't lose a trade and you are out of the market completely. So ladies and gentlemen, you must be ready to save your money. It's what you save that you can invest. Many people with the poor mentality, they tell you saving is a good culture, saving is a good culture. I tell you, fine, that's what we were taught when we were small. But I've come to realize that saving is the mentality of the poor. Savings is the mentality of the poor. Investment is the mentality of the rich. Oh, save your money. Have you ever seen somebody who saved money and became a millionaire? The only way you can save money is you save money to make an investment. If you are not trading or doing business with your money, you're a bad person. You're an unfaithful servant. I'm not the one that said it. Even the Bible said it. You remember that three servants? The master was traveling, and he said he gave one 5 talents, he gave one 4 talents, 2 talents, he gave one. That's gave one 5 million. By the time the master came, the one with 1 million, 5 million said, Oga said, "Where's my money?" He said, "Well, Oga, economy no easy, but I traded with your 5 million and I've made it 10 million. Oga, don't be annoyed. I wish to increase it, but then." The master said, "Oh, good. You are a good and faithful servant. Come and enter into my rest." Are you there? Then the next person, he said, "Where's my money?" The guy said, "Oga, you only gave me 2 million naira, 2 talents, but I have worked with it and it's now 4 million. Oh, you are a good and faithful servant. Enter into my rest." Then he met the last one. He said, "Where's my money?" Then I say, "Oga, now only 1 million you give me, only 1 million. And you know this, our economy is very dangerous. You know all this COVID-19 and all this. I was very scared of doing this investment. In fact, I had to go and take that money and I've saved it in the bank. Oga, I will go, the money is in the bank. Oh, I can tell you, there is no, let me go and withdraw the money for you." And the master looked at him. He said, "You are a wicked servant. You are a wicked servant." And you know what the master said? He said, "Take that money from him and give it to that one that has more." And that is the principle of the world till today. Money is always being taken from the poor and given to the rich. Because the poor man is not thinking, he puts his money in the savings account. He said, do you know how much I have? I have about 10 million naira savings. I have a 20 million naira savings. Now, the bank will collect. Even the banks will tell you, oh, they encourage savings. They will encourage you to save. After saving your money, they will gather all the money and they will now call on Dangote, call on Adenuga, and they will say, "Oga Dangote, you know the people that are not thinking, they have put their money in the bank. We have a lot of money. Oga, do you need more money for your business? We know you are the thinking people." And they will now give them that money. And Dangote will go and do business with it. Adenuga will do business with it. And when they multiply the money, they will now give you interest on your savings, 5%, say 8% per annum. And the cycle continues like that. From today, you know what to do with your money. I don't have money in the savings account. except the money I want to use immediately. So ladies and gentlemen, you must know how to invest your money. This skill set will help you to invest. Then when you invest, the thing that you have is what you call the return on investment. That's when you say you are making money. When you want to buy a car, you are buying a car from the return on investment, not from your saving. Some of you will go and take a loan to buy a car. You take a loan to buy. Now, when you invest, you have return. That's what you make. The money you make is the one you'll be able to shield. Then the one you shield, you'll be able to shield it, and then you'll be able to look at who needs money. Then you now become God's hands for, helping people. You become a divine treasurer. So, ladies and gentlemen, these are the ways you can value and control money. So, what are the essential money management practices that you as a trader should have? What are the essential money management practices? Now, the first thing is this. You must understand what to call risk-reward ratio. Risk-reward ratio. You can say, we didn't say reward-risk ratio. You consider the risk first, then the reward. Traders should establish a risk-reward ratio for every trade. Every trade that you want to take, you must be able to establish how much am I ready to risk. I have $2,000. Out of this $2,000, how much am I ready to risk? You state it before you enter the market, and I will show you the things that you will use to control. Then there's something that we were taught also called the stop loss orders. Stop loss orders. Now, traders should employ stop loss orders as a way of specifying the maximum loss they are willing to accept. Ladies and gentlemen, I tell you something, a lot of things as you go, many of you now after this training, you will go and watch different videos. You'll be downloading videos from YouTube. I tell you, me too, I was once like that. I've forgotten that following one mentor, they say those that have mentors will not lack methods. I was, after the first lecture I had, instead of following my mentor, I began to download a lot of videos, watching videos. And then I came across a video of a professor, and that professor was training. He said, don't use stop loss when you are trading. I say, why? And he began to, I tell you, this man gave a logical explanation on why. He said, can you imagine Warren Buffett using stop loss, that they will just come and hit your stop loss and go back and things. And it's true. I've been using stop loss in different things. And the market will go, hit me at my stop loss, and then just go back. I will say, is somebody watching me in this thing? Somebody is watching me. Why is it that he just hit my stop loss? I never knew that. I didn't know how to set it. Ladies and gentlemen, let me tell you this. When that day, I was traveling to Abeokuta. I was having a training. And on the way, there was go slow at the redemption camp area. And I sat in the car. I placed some trade. Ladies and gentlemen, before I knew it, I made between that Lagos-Ibadan Expressway to the Abeokuta, I made about $300 sitting there in the car. Oh my God, my head was bubbling. You can imagine the way I will train that day. I trained with all energy. And then I was about coming back to Lagos. And then one of the guys told me, say, Oga, there's one setup on the harmonic pattern. And I told them I don't like to trade a particular pattern. But when I look at the setup, the thing looks so good. I said, well, it will be a good thing, making $300 coming, and then I will make about $200 going. When I reach house, I will show my wife that, come, your husband is now an actor and things. And that's how I placed the trade. When I placed the trade, within few minutes, pam, I saw $50. I said, and I was so excited. I was driving. Then, along the line, network missed. I said, well, I've set my stop loss if anything happens. As I now got network, I quickly park and check my phone. Oh my God. The trade has reversed and it was approaching my stop loss. As it was approaching the stop loss, I now remember Professor said, this thing will hit stop loss and go back. Although I won't allow that thing to happen. Piam, I removed the stop loss. When I removed the stop loss, I never knew that I created expressway for the product to be going down. Ladies and gentlemen, That thing passed that area. If it had hit me my stop loss, I would have lost $100. But when it passed the stop loss, you know, there's one strategy that you will learn also. I pray you don't learn it too much. It is called the hope and prayer strategy. The hope and prayer strategy. When you start praying and hoping, oh Lord, let this thing come back. Ulua, let this thing come back. You start fasting, you start praying. God, this morning I suffered for it. This morning I did, but you forgot that you broke some rules. By the time the thing was going down, 500, 1,000, 1,005, I was sweating. When I got back home, my wife was saying, what is wrong? I said, there's no problem. All is well. All is well. All is well. All is well. But she was noticing something that for 1 week, because the thing, and you know the bad thing is that the thing will go down like this a bit. It will go down. And then it will come up. I will say, thank God for answer prayer. Thank God, because you know the loss will now start decreasing from 1,500. It will now be 1,200, 1,000. I will say, hey, thank God. Then suddenly it will go no again. I say, oh my God, who is following me in this market? I never knew that was retracement. The trade has changed trend totally. Ladies and gentlemen, that's after 2 weeks of almost hypertension, I closed that account with about $3,000 loss. $3,000 loss. So when I'm teaching, I'm not teaching from theory. I'm teaching you from personal experiences. So you use your stop loss. Then the next thing that you must do is to avoid over trading. Oh, you want to make money, instead of using 0.2 lot size, you want to use 0.5. You want to use one standard lot size. You will be over trading. Now, to just further establish this, I'm going to go on a screen that I want you to bookmark this screen. You need to bookmark this screen, please. It is very, very important. It will help you a lot. The name of the site is myfxbook.com. myfxbook.com. Write it down, please. myfxbook.com. All right? Okay, so I wish I can send screenshots. I did the same thing. I lost more than $500 yesterday. Thank God it's a demo account. Thank God. But from tonight, you will see how not to trade. All right, good. Now, when you get to this, myfxbook.com, come to this place. You see home. Click on home. And then you will see Forex calculator. Click on the Forex calculator. When you click on this Forex calculator, you will see this thing here, position size calculator. I put position size calculator here. See, your trading should be mechanical. Don't use it to don't leave your trading to guesswork. Make it mechanical. Make it something that, oh, this is what I want to do. This is what I want to achieve. Look at this. Sometimes people will say, if you have $500, use 0.01 or use 0.02. If you have $1,000, use 0.1. No, there's nothing like that. That's bull something, yeah? But it's you don't trade like that. You must be able to calculate the level of risk. So now, if I have $500 in my account, I have $500, and the system is saying risk ratio. Is saying, Shola, how much are you in this $500? I'm sure most of you have heard this word before, that don't trade with money you cannot afford to lose. Have you heard that before? Don't trade with money that you cannot afford to lose. See, let me tell you this, that you put $500 in the market does not mean you are losing $500. The money you can lose at a time is the money that you put on a particular trade. If you put your money, if you take a particular trade and you don't put stop loss, you've invested $500 and then you take a trade and you don't put stop loss. What you are saying is this: you are ready to risk the whole $500. That's the meaning. But here, I can calculate, Omoluabi, to get this $500 is not easy. How much can I risk that even if this thing goes the other way, it won't pain my head, my life will continue? 2% is ideal. 2% of $500 is $10 now. Out of $500, $10, if I lose $10, no skin pain. So what I'm going to do, I put 2% here. 2%. I put 2%. Now, I will now go on the trade. Where is my stop loss going to be? For those of you that will be coming to the advanced class, we'll be showing you how to adequately, correctly set stop loss. Forget all these 30 pips stop loss, 20 pips stop loss. For where? If you come in between, if your stop loss is between a value gap, those ones, we call it in the market maker strategy, which is we are going to be teaching a lot in the this thing. Maybe it's between a value gap, or it is between a support and resistance. If you put your stop loss in between, I tell you, the market will go and take you out of your stop loss. So we always advise, set your stop loss some pips if you are buying. Set your stop loss some pips below the low of the day, or below the low of the period, depending the time frame that you are trading. And when you are selling, you set your stop loss above the high, maybe 5 to 10 pips above the high. We're going to do, time will not permit us to do this. But let me say, I have done this now. And in this market, it gives me, oh, my stop loss is 30 pips. Let me say it's 30 pips here. When I click on calculate, when I click on calculate, look at what it's telling me. Shola, you are risking $10. That means if this market, let thunder strike, let anything happen, you can't lose more than $10 in this trade. You can't lose more than $10, no matter what happens. That's what he's saying. You can't lose more than $10. And he's not saying which lot size should you use. Should I just say, since it's $500, let me just use 0.1, 0.05. If you use any other lot size, it will hit you hard. So he's saying use 0.03. So with 0.303 lot size, ladies and gentlemen, I tell you something, you can trade, and one size does not fit all. Look at this, is Euro USD. Let me say I have CHFJPY. Can you see? For this one, it says I should use 0.36. Look at this. For this one, maybe I have a Euro GPP. It said I should use what? 0.02 on the same $500. And maybe the strategy you learn, just like the strategy we are going to be showing at the advanced class, you can set your stop loss as low as 10 to 20 pips. Look at this person. I am ready to risk 2%. You too, you are ready to risk 2%. But your own stop loss is 30 pips, and my own stop loss is 15 pips. Look at, ladies and gentlemen, I want you to see this. If my stop loss is 15 pips, look at the person with 30 pips is 0.27. But look at me with 15 pips. When I calculate it, look at the system is saying I should use 0.05. And you will agree with me, the person that use 0.05 and the person that use 0.03, the 0.05 will make more profit. And we are risking, and if it hits me at my stop loss, it's still $10. If it hits you at your own stop loss, the only thing is that me, I'm taking a higher risk. It will likely hit me at my own stop loss first before it hits you at your own stop loss. I believe you are getting me. So, ladies and gentlemen, this area, I wish I can, it is a lot that we take here, but I have to go and close the advanced class. They are finishing their class today, and I have a course that I'm taking them. Somebody is taking them already. There's a course that I'm taking them, which is we call it portfolio risk management. That one is different from this money management, but because of the time. Now, ladies and gentlemen, this is a little clips of what you will see as money management is concerned. I tell you, let me show you something quickly. When people say, because at times people say, Mr. Shola, are you not misleading people? You said risks that the Forex market is not risky. You say the Forex market is not risky. I'm going to show you this quickly. Please just follow me. I might be fast just to save my time. Now, this is Emeka. Emeka invested $100. $100. I get it. Okay, I think I have this thing here. Risk calculation table. I tell you, trading is a serious business. Trading is a serious business. If you want to make it, you will need to be serious. Oh, why is this thing wasting time now? Why? Oh, I copied it somewhere. Okay, now look at this. Ladies and gentlemen, look at this. Let's look at this. Just pay attention. Some people are asking some questions. Please, I know it's not everybody that will do the advanced class, but even if you are going to stop this class here, it's better you get this stuff. Please, pay attention here. Look at this person here invested, let's use $100, or let me use $200, all right? Sorry, $200. Now, I decide that for every trade, let me use 1%. Let me use 1%. For every trade as a beginner, I don't want to risk more than 1% of my portfolio. That means if I trade, I will do my calculation so that I don't lose more than 1% of that trade. 1%. Now, what is 1% of $200? Of course, that is $2, right? That means if I trade now and I lose 1%, that means tomorrow my balance will remain 198. Next tomorrow, I trade again. And I don't know, maybe I didn't get what they taught me. I entered again, the market hit me at 1%. The next day, I enter again. Every time I enter, I'm losing 1%. And look at my balance is reducing. Ladies and gentlemen, how many times will I have to trade before I lose all my money? Even after the first month, my balance is remaining about $157. Ladies and gentlemen, even if all the efforts in your village and they are following that fellow, and if he don't lose reach this time, won't he tell himself the truth that, come, I don't know this thing yet, let me go armed? So ladies and gentlemen, this man can never blow his account. It will take a very, very long time. But look at the man that wants to double his account in 10 days. He wants to double his account. So he's risking 20% using high lot size. Look at the first loss on $200 account. The first loss, he will lose $40. I know there are some of you listening to me that you have experienced this. On $200 account, PM, $40 is gone. You risk the next one. Look at how many times will you trade before the portfolio is gone. Look at look at this. Before 10 days, your balance, look at what you're having in your account. Look at what you're having in your account. Ladies and gentlemen, I want to encourage you. Please, before you start trading, if you don't understand what I've explained very well, before you go into live trading, please go and listen to this audio again, this video again, or get somebody who understands money management. With this, you will never join the league of people that say they lost money in the Forex market. So that will be our own parting shot for you. So ladies and gentlemen, I want to encourage you. Please take money management as very, very serious, as it is a serious part of this business, and you need to treat it as such. So let me quickly take some other things before I wrap up. I've talked about stop loss. I've talked about avoid over trading. And where you are supposed to use 0.03 and you use 0.02, you are under trading. You will be stressing yourself a lot in the market. So ladies and gentlemen, that is very, very key. And then another thing that I want to tell you is this. I cannot overemphasize the stop loss. Look at this man. He can stand in front of this lion and be eating chicken. Now, there's something here, so that when people say it's risky, when I tell people that it's not risky, it's you that is not disciplined. Now, look at this chain here. If this chain is here with a strong pillar, no matter how angry this lion is, it can't break this chain. Now, this man is safe here. If I come to stand beside this man here, is it risky? Of course not. It's not risky because the risk has been what? Defined. The risk has been defined by using my stop loss. So, but anything that brings me to the beriberi and I come to this side, oh my God, Then, or somebody said, you don't need to use stop loss. People that are using stop loss are not amateur and things. They will tell you use psychological. There's nothing I never hear for this market. They will say use psychological stop loss. See, when the loss is getting there, it's difficult for you to stop. So, ladies and gentlemen, if you decide that you don't want to use stop loss, you will be like this. You will be like this man inside the lion's den. You see red on top of the man body. This is how you will see red in your account. Ladies and gentlemen, except you have the strength of Samson. Oh, and I don't know how you are going to survive this market that is worth about $6 trillion. Ladies and gentlemen, always use your stop loss. Then that takes me to quickly to the side we call the psychology of trading. If you got what I've said, if what I've said makes sense to you, can you type 555 or put a 777 that you got what I'm saying? You got what I'm saying? Put a 777 in the chat box. Awesome, awesome, awesome. Thank you very much. I'm glad at least most of us are getting it. Thank you very much. Thank you very much. Okay, now quickly, I will go into the other aspect that I call psychology of trading. Now, trading is more of psychology. It's more psychological than technical. You can understand how to trade, do analysis, do technical analysis, you do fundamental analysis. But if you don't have the right psychology, you won't be a good trader. You must be psychologically balanced. Calmness of the mind is one of the beautiful jewels of wisdom. As a trader, you must be calm. Don't say, I need to pay my children's school fees, and the tension of children's school fees is inside of you. And because of that, you want to start trading. I tell you, you will lose all the money. I tell you, it's what has happened. There was a time I needed to pay my children's school fees, and I was trading. And at a point, I told myself, I said, I was doing well, doing very well. But the day that I said, I want to trade the money from this trade, it's as if somebody, I don't know what happened, somebody had me or something. Osa, straight, loose. I had to tell myself, come, Shola, leave this thing. You must be calm. Don't fight with, don't have a quarrel. Oh, you are quarreling with your husband, your wife. Let me even go and face my trading first. No, you need to be calm in your mind. At the end of the day, a trader who is humble to cope with the stress of the market, if you can't cope with the stress of the market, you cannot withstand it. At times, the market can, carry you up, carry you down, and swing you down. But you must be calm. Oftentimes, we have an investment platform, and for when the market is going down, like I always tell people, I say, market is like this. Let me quickly show you something here. This is how market is. This is how market is. Look at this arrow. It goes up, comes down, goes up, comes down, goes up, comes down, goes up. But where is it going? It's going up. Now, somebody who started investment here, he invested $100 there, and he has made $20, so his money becomes $120 here. All right? If the market goes down and lose $10, this man is still in profit. His money is still $110. But there's another man that joined the market when the market was going down. He joined at this level. He put in $100. Day one, day two, maybe it's a month that you even do. You now see loss. $800 becomes $80. You hear somebody will say, Mr. Shola, yes, sir, the thing is going down, far. It's going down. I say, leave it now. My own money is there also. My money is also being traded. We didn't take money from you. And if our own money is there, he said, okay. You know that my friend said, no problem. Day two, he called day 2 or day 3. He said, Shole, what's happening? The thing has gone down from 1,000. It's now 950, 900. I said, leave it. This is market. It fluctuates. The next day we called. He said, Shole, please teach me how to withdraw my money. I said, I never argued with him. And you know the funny thing? He withdrew his money at this point. He withdrew his money like on Friday. On Monday, the market took off like this. Boom, boom, boom. But what has happened? He has incurred a loss. So you must be, for you to have, because there are some of you that want to just do investment, you must have the mind to be able to follow the fluctuation of the market. It is very key for every trader. You must have emotional detachment from your trade. You must be emotionally detached. Though, you know, it's easy to make money with demo accounts. When you are trading demo accounts, oh my God, you can, when the thing goes down and it's going against you, you say, it will come up, no problem, it will come up. It will, because your money is not your money. It's not your money. It's demo money. But the day you put in your own money and you see $200 dropping to $190, tension, we hold you. So you must develop a strong attitude, a strong character. All the guys that you see that are successful as businessmen, they take a lot of risk. They take a lot of risk. So you must develop it, but you can minimize the risk. That is the essence of this class. Know when to take a break so that it's not every time that you are trading. Now, the major mistakes that traders make, failure to have a trading plan. Always have a trading plan. Plan your trade and trade your plan. In the advanced class, we tell them the setup that you need to see. These are the setup. When you see this, we have some what we call a combo, a set of indicators that we use. You know, because of time, I might not be able to show you. If time permits me, I will still show you the results and so on of today. Now, we tell you, if you see this, this, and this, when these three combine, that's when you should take the trade. Some we see two, only two are there. Lord, by the grace of God, this third one too will come. Let me enter quickly. Let me enter. Have a trading plan. Plan your trade and trade your plan. Inadequate trading assets. You know, you can't have $100. You can't have $100 and then you say you want to be trading gold. It's not that you can't trade with $100, but you need to know that for me to go, if somebody says I have $100, can I use $100 to start? I tell you, if you have your $100, you have the company, the market has provided you with $3,000. Be using $3,000 to practice. Use it to practice. Don't just carry your $100 and go and put in this market. I can imagine you putting $100. I try to imagine how much you have. Then you now go and risk it. Practice, practice, practice. If you blow $3,000 account, you can request for another one. Make sure you practice until you say, yes, I have a strategy. That if I have this strategy, there's no 100% winning strategy. Let me tell you that. You must know that. There's no 100% winning strategy. But you must be able to get to that point where you say, 70% of the time, I will be in profit. Expectations that are too high too soon. Somebody tells me, he said, Mr. Shola, can I double my $200 to $400 in a month? I say, hello, sir. Have you been able to double your salary in a year? You went to university, you did everything, you couldn't double your salary in a year. Now you want to start a skill that you learned yesterday. You want to, it's crazy, ladies and gentlemen. So lack of patience and discipline. Trading against the trend. Hey, please, I beg of you. The trend is your friend. Never trade against the trend. If you want to last in, okay. Olubumi, I'm hearing you. Okay? If you want to last in this market, for you that you are a beginner, please don't join anybody to trade what you call pullback. The market is pulling back. I can take it small. Yeah. That thing that made me to blow my $3,000 that day was a pullback. It was a pullback trade. Always identify the trend and you use a higher time frame. Some of these things we explain to you in the advanced class. But even if you don't attend the advanced class, you can get materials and, you know, just keep on educating yourself. But make sure you get materials from the right people. Allowing losing positions to ride on for too long. You see, when you are losing in that trade, I was losing $100. Maybe I'll be cut the thing and let it go. I left it to 200. I left it to 500. I say, it will come back. It will come back by the grace of God. It will come back by the grace of God. It will come back. And when you are having profit, you don't do that. Once you do profit, you see $2, $5, you cut it off immediately. Now you are losing and you are holding for too long. Failure to accept complete responsibility. Always accept responsibility for your trade. Don't say it's the market. It's the market that went again. It's you that did not do your analysis, not getting a bigger picture of the market. Then the last thing I just want to quickly add is, please don't trade over the weekend. Don't leave your trade over the weekend. It is always good for every trader. Close your trade before 9 to 10 p.m. on Saturday. It will on Friday, I mean. You see me, you can see that I'm looking. Yeah, I have a principle. Once it's 9 o'clock, all my trades should be closed. And that's why I have some trades running. I want to make sure that once it's getting to 9, whether in profit or in loss, I want to close my market. So ladies and gentlemen, remember, discipline, confidence are these things that you need. Confidence and not overconfidence are the things you need to be a successful trader. Ladies and gentlemen, for those of you that want to continue your career in trading, I want to encourage you. Make sure you get a lot of learning. Now, talking about a lot of learning, I want to at least I'm going to stop the recording here. So for those of you that did not join on time, you can look at and watch this video again so that you can get. And for those of you that are in the advanced class, I can assure you, you will get more of what we are talking about. Now, I'm going to be talking about, let me show you something here. Let me bring
recording is still up. Recording is still up.
Okay. Sorry, let me just stop this here.